economically, that's going to be the number one question people have is, what's the population look like over time? Is this cobalt mine just coming back in? Like, have the prices already changed in the area as a result of those announcements? Like, those are some of the things I would ask.
Good questions. And so the population actually was on a decline. And the expectation is now it's going to be on an incline. But because this is the issue, right? When you're going to these mining towns, you are so predicated on the mining itself.
Yeah.
It's feast or famine.
You need mining, yeah.
Right.
Well,
really, yeah.
And there's that, the old wisdom, right? Even if you read Don Campbell's or his book, that was one of the first real estate investing books I read. One of them, and talking about don't go into a one-trick pony town. But I mean, I think you can't paint everything with a broad stroke. You have to adjust your return expectations.
Well, this is it.
You have to make sure it makes sense for your portfolio, like not too much concentration in that type of asset, where if it didn't go well, that's going to be a major problem for you. Welcome back to REI Hot Seat. Andrew Hines here with David Hulshof, and we are talking about a building or a portfolio of buildings.
Yeah,
Three buildings, Cobalt, Ontario. Most of you won't know where that is, so we're going to go ahead and share that right now.
So here's Kirkland Lake as an example.
Kirkland Lake, some people I know invest there, so maybe that name's familiar. It's about what, like an hour it looks like from Kirkland Lake?
About an hour, yeah.
A little south of there, so hey, you get the warmer weather.
There you go. And if we zoom out, this is where we are right now, Burlington.
So we're down in Burlington. What's that say it would take to drive there?
5 hours and 35 minutes.
Not that you should be driving to your properties anyway if you're managing appropriately.
We have allocated a property management expense for just such a discussion.
Yeah.
There you go.
Yeah. So let's talk about the deal. Like, why do you like this? Why are we talking about it?
Yeah. So this is a listing we took on. It's a client we know. This is a power of sale deal. So there's a three building portfolio. The most compelling component to this will be the price, which we'll jump into. But just some little context to Cobalt. The U.S. military actually just did last year a $20 million capital injection. It was a grant just to continue to get the mine up and running. So there's actually obviously a cobalt mine there.
I was going to ask that question.
Hugely successful for a while. Actually got shut down, and now it's being all reinvigorated there. So interesting. The $20 million grant from the U.S., went in the weeds on this, was a no strings attached grant. Here you go.
Interesting.
$20 million. Canadian government put in what would be the equivalent to, I think it was $5 million US, so USD.
So we got 25 million.
25 USD which is a lot, especially out there, to basically get this up and running. And the US's perspective was huge need for cobalt, obviously.
What's it used for?
It's used in a ton of stuff, a lot of military application, but the big one that people know it for is like EV, like batteries.
Okay. Yeah, I was wondering if it's that's the primary material for the batteries. Okay.
Yeah, and then just a lot of the cobalt mines in Africa, there's just some pretty big issues with how people are being
humanitarian stuff.
That's the word I was looking for. Thank you, Andrew. So that aside, we need to be less reliant on, want to be more reliant on North America for these types of things. So that's why we got a no strings attached grant. Here's the money, and away you go.
Obviously, that's going for the area. I mean, economically, that's going to be the number one question people have is, what's the population look like over time? Is this cobalt mine just coming back in? Like, have the prices already changed in the area as a result of those announcements? Like, those are some of the things I would ask.
Good questions. And so the population actually was on a decline. And the expectation is now it's going to be on an incline. But because this is the issue, right? When you're going to these mining towns, you are so predicated on the mining itself.
Yeah,
it's feast or famine.
You need mining, yeah.
Right.
Well,
really,
and there's that, the old wisdom, right? Even if you read Don Campbell's or his book, that was one of the first real estate investing books I read. One of them, and talking about don't go into a one-trick pony town. But I mean, I think you can't paint everything with a broad stroke. You have to adjust your return expectations.
Well, this is it.
You have to make sure it makes sense for your portfolio, like not too much concentration in that type of asset, where if it didn't go well, that's going to be a major problem for you.
And we had this. So in talking with the ownership group, we had this conversation with them really about we need to have such a compelling sale price. You know, what's happening in the market in general, not even just in Cobalt, the only stuff that's really selling is the stuff that knocks us out of our chair. It's got to be compelling. We did the Port Dover deal. We did the Goderich deal, right? Hard to not make sense of those style of deals. When you try to swing for the fences on any listing, it's going to sit around. So as a seller, you have to kind of feel some pain, because really most people that are selling right now are selling for a reason.
They have to, yeah.
They have to. We've shut down a lot of listings, which if you're if you're one of those people that, you know, hopefully it landed well, which is really, we're not in the business of just taking on listings for no reason. And
right.
We have to price it accordingly. And one of the challenges now is on the listing side is really trying to understand where it's going to transact. So what we've been doing is getting it and sending it to clients and some other agents and gauging some reactions of price and using that as a price point, because it is kind of all over the map right now.
Yeah, would you call it a stagnation of prices, or are you seeing a decline in prices? I guess uncertainty, anything goes in uncertain times.
Yeah, like I would say if you go back 3 months to, you know, and mirror that to where we are today, it's not that there was a huge reduction on price. It's that the stuff that sold 3 months ago was selling for, you know, a very good opportunity, and so is the stuff today. But if you mirror the stuff that is truly selling, it's not like it's on a free fall downcline. It's about steady. But the problem is you're seeing a lot of not even a lot of inventory. You're seeing inventory come out and it's not selling. So it's like we just don't even use that as a data point.
Yeah, the uncertainty of what's been happening, and then of course today, or not today, but just recently, now the tariffs have been ruled illegal.
Wow. So, it's still, the markets are skyrocketing. But the thing is we've got buyers that are disciplined to their model and they're jumping at stuff. So stuff is really transacting. But again, you know, it's the stuff that is priced appropriately that you go, well, that's a good deal, right?
Yeah. I mean, which is no different than any other time when, you know, if you want to make sure you sell, you're the best priced one. Like that's what I do in my business in the U.S. Like we're making sure that we're very attractively priced. You know, we don't want to try and swing for the fence.
No.
You know, we even want to be able to price a little bit below market on stuff and just move it.
That is so exactly the segue to this was the conversation I had with these guys. Is look, how do we help mitigate some of the variables that we're working off of here? And one is, you know, a question mark on Cobalt itself, and there's some good data out there, which, you know, you can Google the metrics and see some of the stuff I'm talking about, but there's still the question mark. So the only way to mitigate that is to, you know, have a very compelling purchase price.
Yeah.
The story on the deal, so it is a power of sale. They've injected, get this, over $750,000 to capex across 3 buildings. Wait till
how many units are we talking about?
27.
27
I'm purposely
units
not
in
showing
total.
the price yet. 27 total.
Yeah.
Okay. There were some bad tenants. They worked diligently to get tenants out. There's no bad tenants left, but a bunch of vacancies. So when we took it on, Jake and I have had this conversation a few times. Vacancy used to be the sexiest thing in the world. You'd bring a 15 unit,
you don't
9
want the
vacancies,
tenants.
and people would go crazy for it. And now they're not, right? And so they had all these vacancies, and they said, well, you know, we've got to do actively filling the vacant units, especially in Cobalt, that are renovated, and they've actually done that. So they filled 3 spots already in a campaign to do some more, and then there's some that need to be renovated, and I've advised them not to fill those. Leave the unrenovated and don't tenant those.
Gotcha.
Okay?
So this is your listing.
It is our listing.
Okay.
Yeah. So if we... when is the last time you saw a $35,000 price per unit?
I don't know. Not in Canada.
Not in Canada.
I don't think I've seen that.
So let me jump here for a moment. This is a style. There's 3 buildings like this. They're all this style of quality. So this isn't a horrifically beat up portfolio of trashy stuff.
Yeah. What was the original use of this building? Those look like garage doors.
I don't know.
Yeah.
Good question.
Is that like a street front, like commercial use in the past, or
Perhaps, yeah. All legal registered units. So.
On the main level, I'm just saying. It looks like it was always res up top or something like that.
Yeah, so it's here's
nice bones to the building.
Yeah, here's a little spin around. It's a nice place. So that's the quality of the product.
Yep.
Because if you look at 35,000 a unit, you think these are falling over.
So
they're not.
It's a little small from this distance, but what are we talking on the total price point then? Not that I couldn't pull up my calculator.
No worries, 950. The list price is just over $1 million. 950 is pretty much where we think it'll land, somewhere in the nines. That puts it at about $35,000 a unit. So we've modeled it out, trying to fill in some of the vacancies, because we've actually had this debate with many people. Is if you have the vacancy, you just leave it at zero. But the problem is going to be, discussions around what we're selling as a cap rate, right?
Right.
So
you're filling the vacancies on here and then leaving in your vacancy rate.
You got it.
To make sense of it from a lender's perspective and from that's a standardization feature, right?
Yeah, and we can always sub backwards and do a bunch of stuff for people that are looking to buy it, but it gives it, tenanting these units, you're at about a 12 cap. I put 8 cap rate on the exit, which puts it at about 1.4 million
for refinance purposes.
For refinance purposes, I think that's more than fair. That's $53,000 a unit. I mean, I suspect you're going to pull off a lot better.
And to give people an idea of the rent, like $1,300, I see there's some existing rents at.
No, that keeps going.
There's some existing rents at what price?
13.
13.
For 2 beds, and then the 1 beds, they're 1,200, 1,100.
I see some 600s in there.
Yeah, so there's some low paying tenants. The ones that remain are good quality.
Yeah.
Not that the people that left, not all of them are bad, in case they're listening. There were some really good ones, but they were able to find them other areas to go. Because the whole premise of this before the power of sale was doing exactly what the new buyer is going to do, which is to finish the campaign, renovate the non-renovated, and tenant them, send it to CMHC.
Gotcha.
Okay. You'll see no charge for parking. That is pretty typical for places like Cobalt. You're not really going to get much. The laundry income is very low as a result of the large vacancies. We've increased that. It actually should be higher. It should be 25. Yeah, I knew that was low. It should be 25 a unit. It's 15 for some peculiar reason, but we'll leave it.
You're just assuming they'll make 25 so
CMHC will 25 a month per unit.
Okay.
Yeah. So CMHC will, that's a good metric.
Okay.
To do.
That's their standard?
That's your standard, yeah. You get away with it. Yeah.
All right. So what kind of, obviously we want to look at like total return, cash flow, those kind of things.
Yeah. So we're going to go to, the sheet's a little bit different than what we've seen. Let me zoom out for a moment, just show you the overview. A lot of what we've discussed in the past has been direct to CMHC. Yeah. So we've just picked the building up, we've put CMHC debt on it, and that's what we're talking about. Mm-hmm. Here, there's about $115,000 of renovations still left. We actually have a full spec quote from the contractors out there that have done the existing units, and they're willing to complete the job. So they're at 115. I always juice things up, so I put 150 with a 50,000 contingency. Okay. So same idea. We're taking the building, but right now we're going to inject some capital, stabilize the building, and then we're going to send it to CMHC. So what does it look like? Okay.
Right. Okay.
And the new box here, which I'll zoom in a moment, is this is the construction amount here. This is the contingency. This figure here is how much we have left in the deal total. And what we're
after refi?
After refi.
Okay, so about $7,000, $7,500.
So this is effectively all your capital. If you remember the crazy days, right? This is a full BRRRR, as the young kids would call it.
They still happen. We still have talked about them on this show.
They happen more now than ever, right? Like there's such
with the uncertainty now, they're happening more. Yeah,
we're starting to see that trend take off again because it's becoming so compelling, right? It's so fun to watch the waves of the trends, right?
And what would the cash flow look like? So you're pulling basically all your money back.
Yep. We're at 85% loan to value. We've got 4.5%. I'm going to change the rate. I'm going to change it to 5.5. The only reason I'm going to do that is sometimes lenders can get a little finicky
with smaller towns.
That's I would argue, a very comfortable budget. But if there's a broker out there telling me otherwise, let me know.
Looks like your DCR is still quite high.
So our DCR is 142, so 27,000.
That means there should be some cash flow there.
Yeah, we've got about 27,500, and that's after all of your money back.
So 27,500 paid to you yearly after getting all your money back, and you've got a healthy management budget in there, so you're not micromanaging or anything like that.
That's a great point. We have 5, so I'd like to adjust that to 7.
Okay, and what does somebody need for this deal in order to do it, because obviously you got to have the cash in to do the deal, and then you can get it back on the back end is the hope. So
75% loan to value at the purchase is very likely. If we go to the purchase, I can tell you what that number should be roughly. It's about 300, looks like. Okay, that's your down payment, land transfer, broker, lender fee, closing costs, and then you need the construction budget. So
you need about 500.
500.
Yeah.
I'm quite comfortable at the 115 mid figure, but it's never a successful model to not build in cushion. So
yeah, better to just build it in. Make sure your deal works either way.
Yeah, I mean, the real question then kind of comes down to your level of comfort. We have there's some groups out there that own Kirkland Lake, that kind of stuff. Those people are we have their attention now because they're thinking, okay, this might be worth it. If this is your first time, from a risk perspective, might not be the right move. I think if you're newer to it, I'd probably put you into a direct to CMHC deal like we've talked about.
Yeah.
But if you're in the business, you're looking for that full BRRRR strategy, this is the play for sure.
Well, it's a cool deal. I like a perfect BRRRR.
Who doesn't, right?
I'm very curious about the temperature in Cobalt. I'm going to look that up right now.
The temperature.
Cobalt.
What do you think it is? What is it here, first of all?
It's 21. It's warmer than it is here.
There you go. It's basically Florida, right? What's it in Florida right now? Not 21.
Oh, man. Yeah, so...
Yeah,
21 degrees today. I think, that matches. I always think that, these places are going to be way colder than here. But average for today's date is 20. And I think where we are right now, the average is 21. So interestingly, not that different.
There you go. It is actually a beautiful little town. I feel like I say that all the time. When Walkerton, I'm hyped about like all these smaller communities, but you go there, the people are cool, the community's cool. It's very nice. It's clean. So it's certainly if you track it, it had quite a downfall. Right, it was. It had a 30,000 plus population when the mine was booming. It was wild out there, and then it's sort of free fall. And then
what's the population now?
That's
not 30
question.
Anymore.
No, I Cobalt, Ontario. It's very low. Where's the population? Do you see it?
Usually it would say on the about section there on the right there, but
1,000 in 2021.
1,000.
Yeah.
Wow. Okay. So it really fell. So there must be a lot of vacant buildings and stuff in that.
When I went, there wasn't that many, but
interesting. It'd be cool to check out that sound.
I'm gonna have to. That's 2021.
It might not be accurate.
Let's get some. I'll update on the next one. What the population is. Let me see if I can get 2025, 2024. It says from 2016 to 2021, it was minus 12%. I need from 2021 to now.
Yeah, I mean, you got to imagine with a cobalt mine being the rage of electric vehicles that there's probably going to be a pretty good demand for real estate in that area.
I think it's Electra that started up this, but a bit of infancy of knowledge on my end, but there obviously a lot of influx of capital going there, and it's a bit ahead of the trend. It was not that crazy. Cobalt was not utilized to the degree it is now, right?
Yeah.
So
yeah, interesting deal. Okay, so Dave, what do we want to leave people with on this episode?
Same as always. If this is of interest to you, reach out. Information is below.
Yeah, you can opt into the insiders list below this video. If you're on YouTube, if you're on one of the other platforms, you can join through the show notes. There'll be a link, and that gets you onto the insiders list. So you get the inside deals, the deals that come through their office, because still the majority of deals are transacting are not on the market. So you're getting some of that. And then, of course, you're getting the way that these guys do their storytelling with deals, because it's not... the average realtor, before I really understood commercial realtors and like good ones and what they did, like I would just see, people put a building out there and hope it sells.
Right.
Whereas one thing I've noticed that you guys do is like you structure it start to finish. How is it going to be financed? What's the angle here? Why would it work? And that's the only way you're taking a listing or presenting something as a deal of the week or something like that.
It's like a deal in a box is what we try to do, right? Especially Cobalt. One of the questions was, okay, interested, how do we finance it? Well, we already have the people that would finance it. And so it's trying to remove as many variables as somebody might need. And one of the things we are doing a lot more of is people that are even saying, look, I'm not interested in selling. This is my building. Can you run your model and let's just talk about it?
Yeah.
And it's been really fun. Like we love doing it. I want to be more engaged with as many people as possible, but it's cool. We'll do this for them. What we get out of it, they get this. They get to report on what we feel the value would be today's market, and the value we get is we get to know these people, and almost certainly the day comes that they want to buy or sell, they come to us. So it's kind of, it's a good give and take relationship.
Good relationship building.
It's not a, hey, now you got to sign something with us. It's just let's run numbers, talk about your building, and see if we can add value. So always willing to do that.
All right. Thanks, guys. So join that list if you are interested, and thanks, Dave, for this.
Thank you.
See everyone again next week when we do this again.